Hello everybody, welcome back. So I'm going to show you the Bitsgap Binance Futures bot. So this is not like the normal Bitsgap bots that I've been using, where if you look at my other videos or if you've seen them in the past, where I turned $1,000 into $50,000 over 4 months. That was using the spot bot. This is a different bot altogether. This is the new feature that they've added for futures trading, so derivatives basically. And this is, I suppose, stage one of a series that I'll make about how these work. And if you've got more questions about it, leave them in the comments and I'll put them into my next video when I update these videos. I'm going to do a few of these because I imagine there's going to be a lot that people want to ask me about it. So I've been using this since March, sporadically, bit by bit, here and there. It's not something I've been using loads of, but I have been using it, and I've definitely had a good degree of success using it. And I'm going to show you what I'm doing and what the bot is doing. So if you want to set this up, I've got links below for Bitsgap. I've also got Binance account links as well if you want to set that up, and you get 20% off trading fees on that as well. And if you wanted to use the Bitsgap link, you would get 14 days for free to trial it, but then obviously there is a subscription if you wanted to carry on with it. So that's all that out the way. That's all in the description below. What's this bot doing? What is it doing? So for those who don't know about derivatives and margin trading or futures trading, just a bit of an overview. What you're doing is you're trading not XRP, you're trading the chart of XRP, a derivative. So you're using the XRP price action, but you're only spending and using Tether. If the chart goes up, you make more Tether. If it goes down, you lose Tether, unless of course you choose to short the market. So anyway, in this example for this particular bot, let's just get back to it. We can see that it's full of grids. And what are these grids doing? Well, normally with a futures bot, in this instance I have $358 that I've put into this bot. I've chosen to borrow from Binance 10 times the amount that I've actually put in, which is what you do with derivatives. You can leverage it, and you can choose to leverage a low amount or to the maximum of 10, which means that I've borrowed 10 times the amount. So I'm not trading with $358 now. I'm trading with the equivalent of $3,580, which is very nice of Binance to do that for me, because if it goes up, I get 10 times more than I would have done normally if I'd have just bought XRP. But if it goes down, it's not like just owning XRP and having an XRP that's worth less. You're actually losing money here to the point where you could lose it to a zero, because Binance are nice in the way that they lend you the money, but they're not nice enough to let you lose their money. So what would happen is, if this goes down to your liquidation point, where you have lost $358, the trade would be closed. You would lose all of that $358, but you wouldn't owe Binance anything. I know that might sound silly, but some people do ask me that, and that's fair enough. If you've never used it before, it's a fair enough question to ask. You're not going to end up owing Binance, hundreds or thousands of dollars. Binance close your trade for you when you reach a zero, because they don't want to lose any money. They're happy for you to make money, but they're not happy for you to lose their money. So that's how derivatives works. So you could go into a futures trade without the bot, and what you would be doing is you would use $358 in this instance. You would use a 10x leverage, and you would get your entry point. So I entered this trade over here, which means that if it goes up by 1%, it's the equivalent of my balance going up 10%. So that would be a 10% move up there. That's excellent. I've made 10%. But hang on a minute. Whoopsie daisy. It's gone down here to the point of 2%. That's not a 2% loss anymore. That's a 20% loss if you're using a normal futures trade. That could be a big problem, because you'll be significantly underwater at that point. That would be a big loss already. And if you went all the way down to 10%, that would basically be a full liquidation. You would be liquidated. You would lose everything. Not with the futures bot. So this is the difference, and this is why it's good, and this is the benefit of it. By using derivatives, you take on more risk to earn more reward if it goes the right way. And obviously we've explained what would happen if it goes the wrong way. You stand to lose everything that you've put into the bot or into that trade. But the nature of the bot is that each one of these grids represents an area where a new long position would take place. So rather than going all in at one place, you are in a bit here, you've closed some, and so the reds represent portions of that long being closed for profit. The greens represent new longs being taken on. So one long there, one long there, one long there, one long there. Again, each one of these will have a 10% potential liquidation point. So each time you can afford to go lower and lower and lower. Then you're not going to get liquidated to a zero balance as fast as you would do if it was a normal futures trade. So these are the longs being taken on, and some more longs being sold. Another long being taken on, more profit being taken, more profit being taken. Another long here, some profit. Long here, some profit. Now, as the chart's going down, the bot is taking on some more longs. That's fine. That's fine. That's what the bot is going to do. So the benefit here is that you're constantly taking profit and you're constantly taking on longs, but at smaller, less risk portions than you would do if you went all in. So it's up to you if this is something that sounds more beneficial to you, because first of all, the good thing is that you're limiting your risk. You're taking on a great deal of risk, as you would do with any futures trade, but you're limiting that 100 times. So your liquidation point is 10 times, 10 for this trade it's 10x, which means that I can sustain no more than 10% down if it was a normal futures trade. But because the last grid here represents the last long that would ever happen, it means that it would be 10 times 10% from there, which in this instance would be all the way down to here. So I would be fully liquidated at $1.31. But if I'd have opened it here as a full-on margin trade, which is where I opened it, the first one was here, I would actually be liquidated here if this was just a normal futures trade. So a very big difference in a full-on liquidation point. So that's one benefit to it. The other benefit is that because there's constantly profit being taken, that is being banked, that's being put into my margin account. So even if I were to get liquidated, each one of these reds is safe and sound in my margin account. So there is a silver lining over any liquidation. There will at least be some profit been taken along the way, rather than you being all in and then fully liquidated if the trade went the wrong way. So that's one of the benefits to it there. So let me just show you my futures history since I've had this going on. I've been going on since about mid-March, and I've had a decent degree of success. Each one of these bots, obviously in the green, is trades that I've made and trades that I've won. But I have been wrecked on some of them. Look, I mean, I lost on my very first trade here. I lost $7 on it. That's fine. The majority of these trades are treated very much like a margin trade. I'm in them for a short period of time. This EOS one is the only example because I was testing it. Basically, I wanted to see how it performed over a long period of time, and it actually did work out really well. Holding this trade for a long period of time. But I did also, try to monitor that chart. So I would. This is I suppose it's more of a test for me rather than what you should do as a responsible trader. You should treat every trade with an entry and an exit point. You shouldn't really leave them for an inordinate amount of time just for no reason. You should close them always for profit when you feel like it's reached its peak. So, generally, like I say, most of these I have won, but I have been wrecked significantly on some of these. A seller wrecked me to the tune of 85% of what I put in. So I put $116 in that. I basically came out with hardly anything. I've lost almost all of it. I had 15% left. But then the rest of them, most of them have done okay. 3 occasions of being wrecked here. Another one here, some more here. So I am getting wrecked here, definitely. I am getting wrecked. But overall, since I've had the bots running on this margin trading platform, on this futures bots trading platform, I'm generally up. Most of my trades have worked out, and I've made a profit of $1,600, which isn't much, but I didn't start with much either. So it's not a great deal, but profit's profit. Do you know what I mean? And most traders aren't going to have a 100% success rate, as much as they'd like you to believe that they do. This is me, bearing all to you. This is full transparency. This is how it's worked out for me. But again, this isn't the bot doing it for me. I have told the bot what I want it to do, so I am in control of it. And so just because you have a bot doesn't mean that it's going to make you money because it is a bot. It's not as easy as just pressing make me money. If only. Maybe in the future there will be a bot that does that, but not right now. There's not. So you are in control. So the best thing is, if you have a good degree of confidence that the market is going to go either up or down, you either long the bot or you short the bot. If you think it's going to go up, you long the bot. If you think it's going to go down, you short the bot. But you are in control of the whole thing, and the bot will limit your risk exposure to a large extent. Double that of a normal futures trade. Literally double. But it will not save you from a bad decision, as it hasn't saved me on the bad decisions that I made. So it's definitely, like I say, there's really good benefits to this, especially for those people who want to dabble in the futures trading. They want to play with derivatives, and they don't want to incur as much risk as it normally would that you would normally take on. There is definite benefits to this. I would definitely suggest using it. I've been using it. I'm going to continue to use it. It's one of my tools. I use normal futures trading. I use spot trading. I use futures bots. I use spot bots. I use a number of different ways to make money out of this market. You don't have to do one thing only. You can use multiple different ways that suit the market depending on which way it's going. But personally, I really do like this futures bot. So this is stage 1 of, I suppose, the tutorial. It's a bit of an overview of what it's doing, showing you how much I've made or how well it's worked, and what I'm doing at the moment and how these bots are performing. So we're going to leave these bots on, I suppose, for until I feel fit. If you want to know more about it, then I do have a Telegram chat that you can join, and I'm going to make more videos about this. So I appreciate that this is just an overview summary, and hopefully it's made sense to you. But if you want to know more, just leave comments in below, and then when I come around to make the next video, the next stage of this tutorial, then I will answer those comments in the tutorial. I will address what it is that you want to know more about. Anyway, like I say, there are links for all of these things below, Binance link and Bitsgap link. And other than that, maybe I'll see you on the Telegram, and hope you have a nice day. Take it easy.